Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. What a combination into a short position market on Friday after stops were triggered above 71.55.65 along with hopes of a trade deal between the US and China inspired the bulls to gather in more significant numbers. Furthermore, news sources reported on Friday that the US President Donald Trump had asked officials in his administration to start drafting the terms of a possible trade deal with China. However, this story had little merit after White House economic advisor Larry Kudlow said that the President Trump had not asked his cabinet to put together a deal with China and contradicted the early report. There's no massive movement to the deal with China, Kudlow went on to say. We have already put out asks to China with respect to trade. So, what do we expect this week? Well, tomorrow we have the RBA rate decision, and then later in the week we have the FOMC rate decision, with both unexpected to change any policy in keeping their rates on hold. However, this may all change in December, with I do expect to see the US to hike rates 25 basis points, and even maybe the RBA. So with the pattern on Friday, with the Aussie dropping away from the highs of 72.57, does give some concern that the fact this could be quite close to a spinning top and a bearish pattern. If we close under the 60-day moving average, which now comes in, as you can see, at 71.85, and the broad downtrend, 71.70, would reinstate the downside to the target of 71.40 and lower to the recent rejection of 70.20.25. Resistance on the day comes in now at 72.35 with a firm cap above at 72.60.70. On Friday, the market took the challenge to the upside, and as you can see here from the rejection of 114.35, closed back under the downtrend. It is assessed that this week should see further weakness as the US dollar recovers slightly from Friday and look back to the 16-month highs around 96.90 figure. It is assessed that further upside potential for the US dollar would put further stress on the euro and look back to the recent target, which was the August lows around 112.95. Now on Friday, the US Labour Department said that the non-farm payrolls employment increased by 250,000 jobs in October, beating economists' estimate of 193,000 new jobs, while the unemployment rate was unchanged at 3.7%, the lowest since December 1969. The average hourly earnings came in on forecast at 0.2% on month and 3.1% for the year through October. This is the best pace we've seen so far since 2009. The better than expected job data should keep the Fed on track for the fourth rate hike for this year. So let's see how it plays out. With the strategy though, I still view potentially selling towards 114.35.55 and look down towards a target of 113.60 with the base as I mentioned at 112.95. Now beneath there would expose a region of 111.60. Dollar yen not really trading very far at the moment. It's still in a sideways band of 111.45 to 113.65, but nevertheless slightly weaker technical implications does suggest we should see a return back to the downside this week. I don't view much to the upside, with a flat MACD could give further weakness, even though there is an outside range day here to the bull case, but nevertheless should fail towards the 65 region. Little mixed stories when it comes to the pound is that first of all, we had last week comments from the UK Brexit Secretary Dominic Raab, who triggered the move, saying that the Brexit deal was expected on November the 21st. However, at the weekend, the Sunday Times reported that the EU made significant concessions that will allow the whole of the UK to remain in customs union. This solution will avoid a hard border on the Isle of Ireland, thus satisfying the requests of the Duke that prompts the government. However, the Prime Minister's office said that the report by the Times is speculation. Resistance seen at 130.70 and while intact should see a pullback to about 128.60 and reassess from there. Gold still trading in a relatively bullish manner since the rebound from 1,212. The upside test does look towards 46.50 with any pullback for the time being intraday of a support 28 with 24 beneath. Profit taking is expected from 46.50, so I do expect to see longs to start unwinding. Wrapping up with oil, the market is still looking further to a downside test, even though the US Secretary of State Mike Pompeo confirmed at a press conference on Friday that the US would grant exceptions to sanctions on Iran crude. However, he clarified the exemptions to the sanctions on Iran crude exports would be temporary, only lasting weeks. With still bearishness from looking at the weekly chart, though, I do expect to see 61.40-60 hold, and we're not too far away from a reversal, possibly back to about $64.50 to $65 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the rest of the day that's ahead.